So, Madam Chairperson, Madam, it's 6 o'clock. Shall we start?
Yes, sir.
Yes. Good evening, friends. You are all welcome to this virtual seminar. This is a 2-day program. What's new? It is coined as What's New. Today we will be dealing with what's new in GST. Speaker CA Fanikiran has already joined us, and tomorrow it will be what's new in income tax. It will be dealt by CA Chindur Sudhir. Friends, before we start the program, let me play the motto song. We need not stand, but as a mark of respect, we can place our hand on our heart. Give me a second. I play the video.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Now, may I request the chairperson of Vijayawada branch, CA Geddam Shita Shirin, to give her opening remarks.
Today's speaker, CA Utilization Fanikiran, and colleagues in the managing committee and vice chairman of the branch, and our vice chairman Gadavati Srinivas Raghavu, and fellow members. A very good evening to one and all. Hope everybody finish your bank audits, and now it's the time to that we should plan and get ready for filing of individual returns, tax audits, and GST audits, so that we should equip ourselves with the latest amendments and the recent provisions, so that we can give quality service to our clients. On that context, we plan this VCM on the under the name What's New. Dear members, as you know, Vijayawada branch launched AR scheme for the year 2022-23. Guidelines and payment links are all shared to you through emails. Even though specific number of CP hours are given to you, you can join and update your knowledge for the extensive programs to be conducted by the Vijayawada branch throughout the year without any further fee. The response till now for the scheme is so good. So I request all the other members who have not paid for the scheme to pay for the scheme. And I am also happy to share here that we got approval for conducting virtual refresher course of blockchain technology under the guidance of DAP of ICA. And dates are not fixed yet. It will be in the last week of May or in the first week of June. And Vijayawada branch is always at your service. And Vijayawada branch managing committee promise you that with all your support, we are going to conduct extensive number of knowledge sharing programs for the benefit of the members. Thank you one and all. Happy learning. Thank you.
Thank you, madam, for those opening remarks. Now, let me say you a few words about today's speaker. CA Fanikiran is an associate chartered accountant and is an associate member of ICA, and he is also a company secretary. He is a graduate from Osmania University. He has over 6 years of experience in Big Four in the field of indirect tax advisory, consulting, and litigation handling, including appearance before various appellate forums. He has extensive experience in all facets of indirect taxation, such as GST, customs, foreign trade policy, SEZ, SVB matters, and S12 central excise and service tax. His expertise encompasses addressing the key corporate areas of compliance, tax planning, dispute resolution, and ongoing tax education. He has led many assignments involving advisory and assistance in transaction planning, anti-profiteering analysis, advance ruling, EPC contracts, engineering, procurement, and construction contracts, structuring and tax optimization. He has been involved in due diligence exercises and indirect tax health checkup and review assignments, including tax position risk assessment, tax process implementation, and tax compliance. He has worked in a wide range of manufacturing and service industries or sectors like cement, power, textiles, oil and gas, pharma, chemicals, real estate, construction, and EPC. He has worked on various assignments involving capex structuring from the perspective of state incentive optimization. With these few words, sir, it's over to you. It's all yours to take forward the seminar.
Sir, thank you,
Ravikishore
sir.
Ravikishore sir, sorry,
Yeah.
sir. Sir, can you kindly announce the marking of attendance?
What I will do is, dear members, from this time onwards, what we are planning is those members who have joined the conference, in order to just know your presence, what we are thinking of is kindly type your name and a membership number in the chat box. What do you say?
Thank you so much, Ravikishore sir, and thank you to the Vijayawada chapter of ICA and the participants who have joined this meeting, the virtual conference meeting today. So today we are going to discuss on the key amendments or key changes that have been brought in from a GST standpoint with effect from 1st January 2022 onwards. So we have categorized the complete. One second before that. So is it visible? Is my screen visible?
Yes, visible, sir. You can go.
Yeah, perfect. So with reference to that, we have taken that the topics should be covered in this manner. One is the key changes that we have brought in from 1st January 2022. Second is the e-invoicing applicability, which was made effective from 1st April 2022 for where the turnover limit has been reduced from 50 crores to 20 crores. And the key changes that have been brought in Finance Act 2022. So we'll just take you through what are the key changes, the first phase. So the first phase in case of key changes with effect from 1st January 2022 is with respect to the input tax credit, where earlier there was a provisional based of credit which was allowed, where we were in 2019 when this 2A 2B mechanism was 2A was introduced a long time back, but in September 2019 they have specifically mentioned that there is a restriction that has been introduced in provisional in availing the credit. So at that point in time, the restriction was about 20%, where you can take a credit of provisional credit of about 20% of the credit that is matched. Subsequently, it has been reduced to 10%, and subsequently it has been reduced to 5%. And now from 1st January 2022, it has been completely abolished. It has been removed, and there is no business of provisional credit. It is only the availment of credit that is reflecting in GSTR 2B. Now, GSTR 2B has been introduced from July 2020 onwards, and where it has been there is no legal backing for when they introduced GSTR 2B. Subsequently, a legal backing has been brought in, and they've made the GSTR 2B a mandatory thing, wherein whatever credit reflects in GSTR 2B, only that credit has to be taken during that month. Let's say, for example, after the due date, if the supplier submits the return, it will be reflected in the subsequent months 2B, and the taxpayer who is supposed to take the credit can take the credit only in the subsequent 2B, but not in the current 2B. So here, what we'll have to advise all our clients is that the client should ensure that their vendors are actually filing the returns well within the due date, so that there is no working capital impact on the clients. That is point number one. So with reference to so coming back to the amendments that have been brought in, is first thing is that there is a condition that has been introduced that ITC can be availed as per GSTR 2B. There is no provisional credit can be taken, no provisional credit can be taken, and the vendors whomsoever is there have to file the returns well within the due date in order to reflect in GSTR 2B. That is with reference to input tax credit. Second, with reference to the supply definition has been changed, but this change is effective from 1st July 2017 onwards. It's a retrospective change which have been made effective from 1st July 2017, where it has been why is this why this amendment has been brought in. So in order to get this amendment, there is a little background that has happened. One, where the Supreme Court in the case of West Bengal versus Calcutta Club Limited, where there is a concept of doctrine of mutuality, a club or an association of persons, in order to, any services or goods or both have been provided by a club to its members, either in terms of food or beverages or refreshments, whatever it has been considered as a single person, and they are not charging any kind of a tax on it. Now, this amendment, the department disputed, saying that these are two different persons and has to be taken as and has to be considered as a distinct person, and GST has to be levied on such supplies being made. So in this, Supreme Court has given a judgment where they said that doctrine of mutuality comes into picture, where they both are one. It cannot be a deal sale, and they both are one and the same. So in order to give negate this judgment, they've come with a amendment where it has been said that any supplies made by a club or an association of persons to its members, or by members to the association or club, will be considered as a supply, and there should be GST levied on such supplies being made between them. So this supply is effective from 1st July 2017. Now, coming to the third point, very critical and important point, is this self-assessed tax. So self-assessed tax is defined somewhere in explanation to section 75 subsection 12. So what does 75 subsection 12 talks about is, it talks about the determination of tax, and section 79 talks about recovery of tax. So we'll have to read section 75 along with section 79. Now, what is this amendment very much relevant to? In case of this explanation, self-assessed tax, where a person who has actually reported the tax liability in GSTR 1 and has not reported the said liability or paid the liability in GSTR 3B, in such case, the department has got powers to recover the entire tax under section 79, where this provision was not there, or this amendment was not clear. Prior to this amendment, it was not the same case, where there is no self-assessed tax while self-assessed tax was defined, but there is no clear-cut definition on what has been reported in GSTR 1 and what has been reported in GSTR 3B. If there is any differences in liability, those liabilities can be recovered under section 75(12) by invoking the provisions of section 79. So in our case, in this case, what has happened is there is another section about section 73 and 74, which also deals with determination of short paid taxes or short levy of taxes, or recovery of excess refund which has been given to the SSCs, both under fraud cases and other than fraud cases. In section 73 and 74, these provisions shall not apply at the time of the recoveries being made in section 75. So in this case, an instruction has also been given by CBIC to its departmental officers on how do they recover. There can be a genuine case also where I report GSTR1 and I forget to report the said liability or make a clerical error while reporting in GSTR3B. In such cases, how do I deal with? So there is an instruction that was given to the officers by the CBC. In the said instruction, it has been clearly mentioned that whenever any such cases are identified, those cases, there should be a letter that has to be issued to the concerned taxpayer, and the taxpayer has to respond within a limited time period on the reasons why there is a discrepancy between GSTR turnover reported and turnover and tax liability reported in GSTR1 and GSTR3B. Basis that, if the officer is satisfied, they will go ahead and allow us the benefit of on adjustment to be made in subsequent returns, or what else to be made based on the case-to-case basis. They give us the relief. If the officer is not satisfied and there is a genuine case where the liability has not been paid by the concerned SSE, then the SSE has to pay the liability within a period of 30 days. So this has been clearly specified in the instruction. Now, coming to the another one where it's a section 83, very important section, where these days we quite often see our clients getting notices saying that there is a provisional attachment of property or a bank account. Here, this scope of provisional attachment under GST has been significantly expanded. Earlier, it was only limited to certain sections and certain cases as such prior to the amendment, where a provisional attachment of property along with the bank account can be made only in a certain cases which involves non-filers and assessments of unregistered persons, and special cases and inspection and search, seizure and determination of tax under both fraud and non-fraud cases, that is under section 73 and 74. Post amendment, this entire provisional attachment the concept of provisional attachment under section 83 has been expanded over the entire chapter, where if the proceedings are initiated, there can be a chance that they can attach the property of the client along with the bank accounts. They can freeze the bank accounts as and when the proceedings have been initiated. Now, coming to section 129 and 130, this is pertaining to the goods that are being transported from one location to another location, where section 129 and 130, earlier it was more of a case where, say, if section 73 and 74, which talks about, 73 talks about determination of tax under non-fraud cases, and section 74 talks about determination of tax under fraud cases. In both these cases, if any adjudication proceedings have been concluded, then the concerned adjudication proceedings under section 129 and 130 is deemed to be concluded. Now, after this amendment, they have delinked these provisions of 129 and 130, where the proceedings, if the proceedings under section 173 and 74 are concluded, the proceedings under section 129 and 130 are not deemed to be concluded. They can still continue. What will happen because of this amendment? Because of this amendment, there can be a multiplicity of litigations, and there can be a parallel proceedings that can continue on a single matter. Now, coming to the as an extension to section 129 and 130, in case of section 129, prior to the amendment, there are cases where the owner fails to pay any amount of tax or penalty, and immediately the penal provisions under section 130 gets triggered. Now, the said section 130 has been removed from the reference of section 129, where it said that 129 becomes an independent provision and 130 becomes an independent provision. What is section 129? What is section 130? Section 129 talks about detention, seizure, release of goods, and conveyance in transit. What is section 130? Confiscation of goods and levy of penalty. So there is a significant while it seems to be one and the same, but there can be a difference that can be drawn whenever a vehicle has been interrupted by or intercepted by the authorities or the state intelligence authorities or whomsoever it is. They will immediately invoke the provisions of section 129, and then subsequently they go with the confiscation of goods, that is section 130. So in case of 129, the time limits have been changed. The penalty provisions have been changed under section 129. Earlier, whatever provisions are there under 129, they used to be referred to a specific penalty provisions, which has been specified in section 129 along with the general penalties. However, now the penalties have been clearly specified in a manner which I will show in the next slide. So now about the time limits specified in the section 129. One, a show cause notice shall be issued after a vehicle has been intercepted. A show cause notice shall be given within 7 days of the date of retention of the vehicle, and an order should be passed within 7 days from the date of notice. And the disposal of goods, let's say for example, if the person doesn't pay, or if the person doesn't turn up to release the goods, then they can dispose of the goods within 15 days from the issuance of the order. Let's say, for example, the goods have been, the authorities have got the power under section 129 to sell the goods if the concerned person or the owner of the goods or the transporter doesn't respond. In that case, they get the power to dispose the goods, and subsequently, how about the conveyance? Conveyance, he'll not be able to. He can also sell the conveyance in that case. So, in order to release that conveyance, the transporter can pay a penalty of about ₹1,00,000 or penalty specified in the subsequent section, or ₹1,00,000, whichever is less. So these are the before that, sir, please let me know if I'm going very faster. Otherwise, I'll cut down my speed and I can explain.
Sir, you can go at your comfortable pace, sir.
Perfect, perfect. Just let me know if I'm a little faster, sir. Yeah. So with reference to the penalties, these are the penalties which have been levied in case of goods that have been detained up to 31st December 2021. These are the penalties which you could see on the left side of the screen, and these are the penalties with effect from 1st January 2022. Now, the harsh part of this section is, earlier it used to be 100% of tax. That means even though you pay tax, again, after the goods are detained, the officers used to demand us to pay 100% of tax again, and 100% of tax as penalty. So technically, there is no change from a amendment standpoint, but from a conceptual standpoint, it is no more tax that is to be paid. It is only the penalty that has to be paid. So now they have removed the word tax from the penal provisions. Now there can be two scenarios where the owner comes forward for a payment of penalties or payment of tax and clear the goods. And there can be another scenario where the owner doesn't turn up for the payment of goods. In such case, up to 31st 12/2021, where it is a taxable goods which have been detained, then the tax has, a penalty is equal to, what shall be paid at the time to release the goods? One, tax at the rate of 100% and penalty at the rate of 100%. From 1st January 2022, it is penalty of 200%. Similarly, for exempted goods, it is lower of 2% of value of goods or rupees 25,000, whichever is less. And the similar case, similar thing follows with the 1st January 2022. Now coming to this second part where the owner doesn't turn up. In that case, it should be 100%. Yeah, it should be 100% of tax, that is tax. 100% of tax that you need to pay, and with reference to the penalty, it is 50% of the value of goods minus the tax that you have actually paid. So this is up to 31st December 2021. From 1st January 2022, it is higher of 50% of the value of goods or 200% of tax, whichever is higher, it has to be paid. Now, technically, if you see, there is, if you see my comment that I've mentioned, technically, if a goods have been detained and a person has to release such goods, then he'll have to pay tax of 100%, which he reports at the time of filing GSTR 1 and GSTR 3B. And if the goods are caught and you'll have to release the goods, then you'll have to pay a penalty of 200%. And coming to an interesting part, you don't agree with the person who has actually penalized us. So we, against the order that has been passed under section 129, you go for an appeal. And in the appeal, you pay, while filing the appeal, there is a pre-deposit of 25% of penalty that has to be collected and that has to be deposited before filing an appeal. So overall, if you see, on one single transaction, we are supposed to pay about 325% of tax. So we should be very much careful in terms of documentation when you are transporting the goods from one location to another location, because it could be e-way bill, it could be e-invoicing, it could be the particulars of the document from where you are particulars in the document from where you are shipping the goods and from where you are delivering the goods. All these documents have, all these details have to be properly captured and has to be matched with the e-way bill and e-invoicing and the invoice. So let's not, I mean, we will have to suggest our clients or advise our clients not to make these kind of a silly mistakes, which will cost them a bomb. It's more than a 3.25 times that we are paying to the government. And another important thing is that you cannot avail any credit of earlier what you used to do before 31st December 2021. People used to take a position of, taking a credit of tax that they have paid. But under section 129, when you're adjudicated, you're not allowed to pay, you're not allowed to take any kind of a credit. Now that tax portion is gone. From 1st January, it is completely penalty. So there is no chance at all to avail any kind of a credit into our books of accounts. So we'll have to be very careful while advising our clients. Now,
sir, sorry to interrupt you.
Yes, sir, please.
Will you allow the participants to ask for the doubts in between, or shall
we will take up in the end and preferably, sir.
Right, sir. Right, sir.
Right, yeah. Thank you.
So, friends, what I request you is you please note down your what are all the queries we have. Definitely at the end we will have a session for question and answer.
Maybe they can also type in the chat box. We can run through the chat box also, sir.
Yes, sir.
Done. Thank you. Now, with reference to the another significant amendment, people used to, the taxpayers, people in the sense taxpayers here, used to file GSTR 1 for the purpose of those invoices getting reflected in GSTR 2A or 2B, and ensure that they get the payments, and so that these payments are being paid at the time of filing GSTR 3B. And this kind of management used to happen between the suppliers and the customers, where they used to file GSTR 1, but they never used to file GSTR 3B. There were many instances where we have seen in many of our clients. In that case, there is an amendment that has been brought in where it has been clearly said that GSTR 1 shall not be allowed. You are not allowed to file GSTR 1 if GSTR 3B for the preceding month has not been filed. Excuse me. Yeah. So similarly, another provision has been brought in. This was brought in the Finance Act 2021. Aadhaar authentication for registered premises made mandatory. This has been brought in 2021. If most of us open GST portal, we will immediately get a pop-up, and we keep ignoring that pop-up saying that, okay, we will deal with it later. But that is very much important, because even I realized I was also in the same scenario where I ignored it. And at the time of filing GST refund, and we wanted to file GST refunds for our clients, and this pop-up, this instruction have popped up saying that you have not done the Aadhaar authentication. So this Aadhaar authentication is very much important. where you are allowed to. The reason why this has been made mandatory is to avoid various frauds which are being done, because earlier at the time of registration, people used to put some other's email ID, some other's phone number, etc., etc. Now it is not that case, where you'll have to make an other authentication while you give your phone number, give others your consultants email ID, etc., etc. But other authentication has to happen for all the directors or the authorized signatory, whomsoever has been appointed as. Now, this is pretty much important for these three cases. One, revocation of cancellation. There have been a lot of cases during COVID where people have not filed returns, and subsequently they notice that their registration has been cancelled. And in order to revoke, their other authentication is mandatory. Okay. Second thing, for filing of refund under under Rule 89. And third thing, refund of IGST paid on export of goods under Rule 96. So under these three provisions, you are supposed to make the other authentication compulsorily. It is mandatory, without which your system will not allow you to file any kind of a application in these aspects. Now, coming to the exemption withdrawn, with reference to an exemption, there is a entry that has been with reference to an exemption notification. There has been an entry where it said that pure services and supply of composite services, where the value of goods does not exceed 25% of the entire, I mean, goods value doesn't exceed 25% of the contract, which has been provided to the governmental authority or any entity. The said exemption has been withdrawn. That means what? Any services or supply of composite services to a government authority is taxable. Taxable at the rate of what? At the rate of 18%. Now, the question comes here is, what about the previous contracts which you have already entered into? In that case, you will have to again renegotiate with the said authorities, because the suppliers would not have ideally factored those GST portion, which will again eat away their profits, because if the contract is all inclusive, or if the contract is without GST, I mean, if it is plus GST, doesn't mind. If it is without GST, it is all inclusive, then that will eat away the profits of the suppliers. So this amendment is not a welcome amendment. However, there has to be a renegotiation that has to happen with the governmental agencies. Now, with reference to one of the GST Council meetings, and where there was an inverted duty structure, it is a big havoc that has happened in terms of textile or in terms of footwear sector, where the inputs are higher and the output rate is lower. Rate of inputs are higher and rate of output is lower. In that case, it's an inverted duty structure. In case of that inverted duty structure, the government really wanted to plug the deficiencies in inverted duty structure, and they wanted to abolish this inverted duty structure. In such case, what they have done is they have increased the rates. Now, why was there a big issue with the inverted duty structure? Because these sectors of textile and footwear, they were never used to get a refund of input services. They always used to get a refund of inputs only. So while there have been multiple writ petitions, multiple representations being made with the GST Council to include input services also for the purpose of refund computation, the government did not consider that, and due to which there was an inverted duty structure that has been formed, and the textile and footwear sector was not benefited because of that. By not including that input services into the definition of ITC, for which you are eligible for a refund. Now, in that case, the rates have been increased from 5% to 12%, which are supposed to be effective from 1st January 2022. However, the same has been deferred for textile sector, because textile sector has made a representation again to the government saying that do not impose these new effective rates, because they have a issue with the cash flow. The entire sector is affected with the cash flow. So that is the reason they represented. Basis that this decision has been deferred. Now, coming to the other point, where the e-commerce operators for food delivery. This is an important and very surprising amendment where Swiggy, Zomato, or whatsoever it is, whatever app, e-commerce app platform, are considered as a restaurant service. Okay, and they are supposed to collect or pay GST at the rate of 5%. Now, uh, they have been included under the restaurant services, which was ideally not falling under the definition of restaurant services, but the restaurant services definition has been amended, and they have included e-commerce operators into the said ambit of GST, where e-commerce operators earlier they used to deduct TCS. Now they are directly collecting, they are directly paying or charging GST on the Swiggy supplies or Swiggy Zomato supplies that they are making. Now the only from a restaurant perspective, not from an e-commerce perspective, because from a restaurant perspective, how do you deal with it? So there has been a clarification that was given saying that whomsoever is selling, whomsoever restaurant, whether it is a hotel or a restaurant, whomsoever is selling through Swiggy or a Zomato, they will have to report these sales in the exempted criteria, in the exempted table of GSTR1, so that this can be tracked from a other perspective, where the restaurants will not charge any GST or collect any GST, charge any GST from the supplier as such. But however, the Swiggy and Zomato will collect, and that will be reported in the restaurant, in the hotel as a sale, as an exempted turnover. So this is the clarification that was given in order to track what sales have been made through Swiggy and Zomato. And surprisingly, another important point is the auto rickshaw, like Rapido and Ola, Uber, whatever it is, where you are booking any auto rickshaw, even for the transport, passenger transport services also, GST at the rate of 5% shall be applicable. Now, this is till this time. I mean, we have done with the changes that are effective from 1st January 2022. Now comes the e-invoicing applicability. So with reference to the e-invoicing applicability, e-invoicing is applicable with effect from 1st April 2022 for the taxpayers whose turnover exceeds more than 20 crores. Now, this turnover exceeds more than 20 crores has to be looked at from a perspective of previous financial years. So it should be from 17-18 till 21-22. So in any of the previous financial years, if the turnover exceeds 20 CR, then the e-invoicing, then the said taxpayer will fall under the criteria of e-invoicing. Now, what is e-invoicing? Compulsorily, e-invoicing has to be done. What is e-invoicing? An invoice which is nothing but which is uploaded onto the GST CBIC portal, and where an hashtag of about 64 unique identification code will be generated. So that is nothing but invoice reference number. Invoice number, a reference number will be generated from the IRP, that is Invoice Registration Portal. Now, without this, invoice without e-invoicing is considered as a invalid invoice. So what are the exempt categories of e-invoicing are? These are the exempt categories. One is SEZ units. Any SEZ unit need not, irrespective of their turnover, they need not they need not do any e-invoicing. Second thing, an insurer or a banking company or a financing company or an NBFC cannot do that, need not do that. And a GTA supplier need not do that. And a supplier of a passenger transport is exempted from this. And admission to a exhibition of cinematographic films in multiplex screens, that is like PVR, etc., need not do this kind of e-invoicing, because operationally it is not possible for them to track the e-invoicing. Now, with reference to the SEZ units, if e-invoicing is not applicable, e-invoicing shall be applicable from a SEZ developer standpoint. So SEZ developer have to raise an e-invoicing. Now, the process of e-invoicing is this, where we raise the SSCs or whomsoever it is, raises an invoice, GST invoices on an accounting portal, and it will be sent to the IRP. IRP is nothing but the invoice registration portal, and IRP will revert with a IRN, which is digitally signed and QR code shall be affixed on it. And the e-invoicing, whatsoever it has been generated, it's auto-populated on the GST portal. Now, if at any point in time, you can also check whenever you wanted to surprisingly check whether the invoicing is correct or not. Maybe you have this QR code e-invoicing scanning app for which you can download from the GST portal. From basis that you can see what all information has been captured in the case of e-invoicing. You can scan it and you can anyone can scan and see the particulars of the invoice. So what is a IRN? What is an IRN? IRN is nothing but a hash code, which is nothing but a 64-digit hash code, and there is no specific limit that is required for to generate IRN, because it's a automatically generated code, and it is generated by the IRP. And printing of the said IRP is mandatory on the invoice, without which the invoice is without the invoice is said to be invalid. Now, there are two parts to it. One is QR code, the other one is dynamic QR code. So this QR code is specific to the e-invoicing. Another dynamic QR code is pertaining to the payment particulars that are required for that is to be reflected in the portal. In case of e-invoicing provisions, it has been mentioned that for a person who is doing the B2C supplies shall have to specifically mention this dynamic code to track the invoice reference number and the payment particulars of in that code. Now, with reference to the QR code in case of e-invoicing, the QR code consists of following particulars, that is GSTN of supplier, GSTN of recipient. One is invoice number, date of generation of invoice values, HSN code, tax amount, and unique IRN and the IRN generation date. Now, coming to the other perspective of what all documents have been are covered under e-invoicing. What all documents? One, invoice, debit note, and credit note. Now, let's say, for example, a person has got both taxable and non-taxable supplies. In such case, whether e-invoicing is mandatory for taxable supplies or non-taxable supplies also. In such case, we would say it is applicable only for taxable supplies. For non-taxable supplies, e-invoicing is not required. And it has been clarified in one of the frequently asked questions specified by, issued by the e-invoicing portal advisory. So what are supplies covered under e-invoicing? B2B supplies, supplies made to a SEZ, export supplies, stock transfers, deemed exports. What are documents not covered under e-invoicing is any invoice that you are issued by an ISD, input service distributor, and invoice issued by issued under section 9(4), that is nothing but a self invoice, or where there are you receive supply of services from an unregistered person. In such case, you need not raise any kind of an e-invoice. And import of services, you need not raise any kind of a e-invoice. Now, there are, the modes of e-invoicing is API based and an offline mode. Usually, who is very much, let's say, for example, whomsoever is working on Tally, if it is SAP, they would have ideally constructed or connected to their API based integration, where immediately an invoice is generated, they would have immediately generated the e-invoice. Now, these are the very important concepts in case of e-invoicing, which everyone should be well aware of. Can an e-invoice be amended? Here it says that e-invoice cannot be amended. They cannot be amended on IRP portal at any point in time. Now, it can be amended only in GSTR 1. However, there will always be a difference in the invoice that you have reported in GSTR 1 and the invoice that you have sent for IRP for generating e-invoice. Now, this will have an impact from the tax authority standpoint. Now, practically, I will ask another question. Maybe we can discuss on later, but park this question. But I will ask this question: where these days, lot of us, if you observe our clients, they issue invoice on one particular date, and they do not raise the invoicing on that particular date. They delay it and they do the invoicing on 15th day or 20th day after invoice has been issued. Now the question here is, can we do so? Now what is the objective of e-invoicing? Objective of e-invoicing is to curb the fake invoicing that is happening. So in order to track the fake invoicing, e-invoicing is being brought into picture. Now these kind of practices will soon be addressed, because this if you ask me the question, funny, can this be allowed? I would say no, it is not allowed. However, currently the system is allowing, so you have no other choice. You can do that. But subsequently, this cannot be allowed because the government is working towards it. Maybe they'll come up with a timeline of when to issue the invoicing after raising an invoice. They will also get the time limit period for that. Now, cancellation of e-invoicing. In case of cancellation, that shall be made within e-invoice is valid for 24 hours. And if it has to be cancelled, it can be cancelled within 24 hours. If after 24 hours, what is the way forward? So in that case, after 24 hours, there is no cancellation. You will have to issue a credit note. For that credit note, you will have to issue e-invoicing. After that only you can, this is that it gets nullified. Now let's say, for example, how do you cancel it? Let's say, for example, if you have an active e-way bill, then you cannot cancel the e-invoicing immediately. So in order to cancel that e-way bill, then you'll have to first cancel the in order to hello.
Sir.
Yeah. So in this case, in order to cancel the e-way bill, I'm sorry.
Okay, sir.
Yeah, sorry for the inconvenience. Yeah. In case of cancellation of e-way bill, first you'll have to cancel the valid, in case of cancellation of e-invoicing, first you'll have to cancel the valid e-way bill. Only then you can cancel the e-invoicing. Now, coming to the last part of the discussion, that is changes made in Finance Act 2022. These changes are, recently on 31st March, we have received the assent of the President, where the finance bill has been approved into an act. And in case of these changes, there are pretty much significant changes, which are to be noted on a day-to-day, because we deal with it on a day-to-day basis. One, with reference to the input tax credit, very significant amendment, where first thing we have already discussed on GSTR 2B being made mandatory in case of from 1st January 2022. This availment, earlier there used to be a time limit which was given, saying that you can avail input tax credit on an invoice or a debit note up to 30 up to filing of GST return for the month of September. Now, what is filing of GST return for the month of September? Which GST return? GST return, GSTR 3B. So GSTR 3B of September is filed in the month of 20th October, but you can't keep accounting all the entries or which are pertaining to the previous year till 20th October. So you will ensure that you are completed your accounting on 30th September. So up to 30th September, it is allowed. Now, this time limit of 30th September have been pushed to 30th November. The reason being is, along with this, they have also made a amendment in the filing of GST return, annual return, and 9 and 9C reconciliation statement by 30th November. So they wanted to get in line everything to be made within 30th November. So the date have been extended to 30th November from 30th September practically. Now, after this time limit, there is another changes that have been made in section 38, which talks about the GSTR 2A and 2B, and what are the important communications that they wanted to bring in GSTR 2B has been discussed here. Now they wanted to, the government is taking initiative to get to ensure that these other details are also captured. One such details are suppliers who have not paid taxes will be captured. Let's say, for example, supplier has, if you observe GSTR 2B now, you can see whether whether the supplier has not filed GST return or not. You can easily see. Now, going forward, they wanted to bring in these details where it says that the person who has not paid taxes also will be tracked. The person who has availed excess credit will be tracked. And there are another condition for payment of liability, where it's been said that in one of the rules says that at the time of making a payment of liability, you will have to pay at least 1% in cash. You can't utilize 100% credit, while making a payment of your liabilities, subject to certain conditions. In one of the conditions says that if your director is paying more than a lakh as an income tax, then you need not pay any kind of a, you can use entire 100% as a credit. Otherwise, you will have to pay only 99% in credit and 1% should be paid in cash. Now, these, if the SSE is not, they are going into such an extent that they wanted to track these cases also in GSTR 2B and 2A. Now, coming to the other provision, that is section 41, where earlier section 41 was a provisional credit, which I have specified in the first topic, where 41 provisional claim has been removed and it is done away with. It is whatever is applicable in GSTR 2B that you'll have to claim. Now, coming to the restriction and utilization of credit, one under section 49 of CGST Act relating to the payment of taxes, the following amendments have been made. One, provide for restrictions for utilization of amount available in electronic credit ledger. You cannot utilize 100% is what they have said, subject to certain conditions. These have been brought in again. And what is the minimum proportion of output tax liability which can be discharged through the electronic credit ledger. So these amendments were brought in, but I will tell you the why. We will discuss in detail whether these amendments are effective or not. Now, third important point under section 49 is in case of transfer of electronic cash ledger to another cash ledger. Now they are allowing. Earlier they never used to allow from transfer of a cash ledger balance. If any amount is lying in one of the cash ledger's balance, you can transfer it to another cash ledger balance within if they both are distinct person. Now this has been allowed. Earlier, if you see, let's say for example, you have it in, they have only allowed to an extent where if you have it in tax and you wanted to pay a penalty, now you can choose the tax you can make by PMT09. You can actually transfer the amount from one ledger to another ledger. Now this kind of a facility has been brought in from a GST number point of view. That is, if you are a distinct person and you have two separate registrations, you can actually transfer from one registration to another registration. Now, another critical point is, if you remember, at the time of introduction of GST, there were provisions which said that 42, 41, 42, 43, and 43. Now, what does it say? It says that if you file GSTR1, it goes to GSTR2A, and in GSTR2A, you used to modify. You will have the option of modify. It is not GSTR2A. It goes to GSTR2A. You modify, accept, delete, or add. These were the provisions initially that was given in 2017. They introduced in the month of July 2017. After accepting all these things, they used to go to GSTR2, and from GSTR2 there is a communication that has been brought in GSTR1A. So this entire mechanism has been now scrapped, completely scrapped, because it is the government has understood that this kind of a mechanism is highly impossible to track. So that is the reason they scrapped this. So there is no two-way communication process. What has been specified at the time of introduction of GST has been scrapped. Now coming to the returns, in case any rectification of error in case of GSTR1 and 3B is permitted up to 30th November of the next financial year. Currently, it is only 30th September. Now it has been extended to the subsequent year. Now coming to the another important point and very critical point with respect to the interest. In case of an interest provision, this amendment, specific amendment of leviability of interest of 18% or 24% for that matter, this has been in news for almost like many GST council meetings, but finally this has been brought in the Finance Act 2022, where it has been said that in case of section 50 subsection 3, it is retrospectively effect from 1st July 2017, where if a credit is available and you did not utilize the said credit, then the interest, the interest shall not be applicable. First thing, let's say for example, if the credit is availed and it is utilized, then comes the interest leviability. So interest leviability comes only when you utilize the credit, and if you remain it as unutilized, then there is no interest. Now, this provision, as per this provision, it says that it is only 18% of interest. Currently, they have prescribed it as 18% and not 24%. So, with reference to the the other amendments are very minor amendments. Maybe I can stress on it. Another important and critical point is the refund matter, where in case of a refund matter, there are two important amendments that have been brought in. One, for claiming any refund that is lying in the cash ledger, a new form shall be introduced to claim the refund lying in the cash ledger. Second thing, with reference to the time limit has been extended from 6 months to 2 years in case of people who are foreign nationals who are supposed to claim GST refund. In those cases, they have extended the time limit from 6 months to 2 years. Now, another critical point here is any earlier, in let's say for example, a taxpayer is there who's supposed to who supplies to SEZ and who's makes exports outside SEZ, that is outside India. So both are considered as zero rated supplies as per the definition of section 16 of IGST Act. Now, we at any point in time, we are allowed to make two refund applications, one for exports being made directly and another is for the SEZ supplies being made. Now, the question here is, what is the relevant date? The relevant date is always 2 years. For that 2 years, what is the relevant date in case of a supplies made to an SEZ unit? That shall be due date of furnishing the GSTR 3B of the month for which you are actually applying the refund. Earlier, this was not clear. Now they have brought this amendment to make this clear. And subsequently, in case of any other amendments, let's say for example, in the case of grant of alcohol liquor, it was considered as neither a supply of goods nor a supply of services, and the said amendment is effective from 1st July 2017. But whomsoever have actually paid the taxes, sorry, there is no refund that will be sanctioned to those in these kind of services. Now, coming to the relaxation of credit period in case of a credit note. In case of a credit note, even the credit notes under section 34 shall be issued within, can be issued up to 30th November. Earlier before amendment, it is 30th September. Now, the kind of, we have discussed this Finance Act 2022. While we have discussed this, the twist to the story is these were not brought into effect. These are not notified. These are yet to be notified. If you say that are these changes effective from 1st April 2022? No, it is not effective. It is yet to be notified. Just these were brought in the Finance Act but are not notified. So now we can take up the questions.
Yes, sir. Now what I will do is, sir.
Yes, sir.
I have allowed all the participants to unmute themselves. So
Right.
friends, you can pose your queries. The speaker will be more than happy to answer all your queries. Sir, before that, I think I have come across a query in the chat box.
Right, sir.
Yeah, CS Satish Kumar. CS Satish Kumar, are you in? Will you ask the query yourself, or shall I read out?
So maybe I can read out the question, sir, because in one of our clients' case, client's GST number has been suspended, that is not cancelled, due to non-filing of returns for the past 7 months. Now, just by filing returns up to date, can registration be revoked or any other procedure allowed? Because the due date of GST REG 31 notice is completed. Now, sir, if it is not cancelled, it is just suspended. You file the returns and make an intimation to the government, to the respective jurisdiction authorities, so that they can immediately revoke the suspension, because it's still a suspension, not cancellation. So they can immediately waive off the suspension. So this registration 31, whatever you're talking about, this due date for REG 31, I understand that this is not still yet operational in GST portal, where you can actually have to make a manual application to the jurisdiction authorities.
Okay.
Yeah.
So the next one.
So there is a direct message that I've got from Mr. PA01. I don't know his name, but so previous year ITC can utilize current year up to November 22. But these ITC generated GST 3B in FY 2021-22 while filing 3B, the system warning showed what to do. So I did not understand this question. Maybe if you can come and ask me, I think maybe we can.
Sir, in the chat box, we have a question. If the amendments are not yet notified, can we implement in our working?
So in our working, yes, absolutely. I mean, if it is not effective, first thing, these are not brought in yet. But considering that these will be brought in, you'll have to work a lot in that aspect. Let's say, for example, I will give you a small example of ITC credit that is there, where GSTR 2B has been GSTR 2B has been brought in. So provisional credit has already been brought in. So we will have to go with that. With reference to the time limits, we will assume that the time limit will be 30th November only, and we will continue along with that.
Right, sir. One more question.
Yes, sir.
Export of nil rated items.
Yes.
Is e-invoice mandatory?
Perfect question, sir. Export of nil rated items is considered as zero rated supplies only. They are not considered as exempted items. In such case, it is mandatory. Because if you see the provision under section 16 of IGST Act, it has been very much clearly specified that these are for the purpose of input tax credit, these are considered as export of services. I mean, these are considered as zero rated supplies, but not as an exempted supply. So exemption character will be lost when you are actually making a export of exempted goods.
Right, sir. The next question is, B2B invoice contains taxable as well as non-taxable items.
Right.
How to make e-invoice?
Perfect question. So,
sir, basically many are doing this, but actually for all taxable items, you have to make a e-invoice, and for exempted items, you have to make a bill of supply, even though
bill of supply. So I'm coming to that answer. For exempted category of supplies, you will have to raise a bill of entry. I mean, bill of supply. For B2B category, you will have to make a tax invoice. So I understand that under Rule 46A, this can be allowed both. Both can be allowed. Bill invoice come bill of supply. However, from the e-invoicing perspective, it is always advisable you divide it between bill of supply and tax invoice, and then raise a e-invoicing for tax invoice.
Though the transaction is one and the same, you have to split it.
Though the transaction is, you'll have to split it, sir. Yes.
Right. So moving forward, appeal can be filed up to which date based on COVID relaxation given by the apex court.
So which forum is the appeal, sir? Which forum is the appeal?
So CA Narendra sir, you have a supplementary question to that. So what is the forum in which the appeal is to be made?
Yes.
We'll do one thing, sir. Let us say before Narendra sir answer, we'll take it as, let us say, first appeal. Okay.
If it is first appeal, sir, you have about 3 months, that is 90 days to file an appeal. Okay. So as per the COVID restrictions, the limitation period is still valid, where we can use that limitation period and we can file it. So the judgment that was brought in on 2nd of October 2021 is still valid. So these period can still be exempted from filing an appeal. Let's say, for example, the order has been passed on 20th March 2020, and there is no appeal that has been filed during that time. Now you can still take that. Ideally, I will put like this, sir, because from 20th March 2020 till 2nd October 2022, there has been I remember it as 2nd or 5th October 2022, there has been a period of limitation where this period is actually relaxed. If the order is passed among this period, then within 3 months after this, waiver of this limitation period, waiver of limitation order, whatever has been passed by Supreme Court, okay, within 3 months from that period has to be considered as a date of appeal. That is from 5th October till 3 months from the 5th October. Maybe I can advise them from a case-to-case basis. Maybe we need to evaluate further.
Right, sir.
Right, sir.
Next, we have another question with regard to, it's from Ramnathan sir. B2B invoice contains taxable as well as non-taxable items. How to make e-invoice? This already, I think we went through it. And in continuation.
No, this is in continuation to his previous question, sir.
In continuation, at the shops, due to lack of trained staff people will be mixing invoices, and practically not possible to split an invoice into tax invoice and bill of supply. And if we don't upload the bill rated, there will be GSTR1 e-invoice mismatch.
So maybe his question is very much specific to shops, is what he says. Maybe we need to understand from his perspective, sir. Maybe he can connect with me on my number. I can, answer his question in detail by analyzing the case.
Right, sir. So before the next question comes in from my side, I want to ask you a query, sir.
Please,
let us say A sold goods to B.
Perfect, sir.
Now that A has uploaded the GSTR1, and also subsequently you will file the GSTRB also. But before the goods have reached B, what happened is the vehicle has been intercepted because of a, let us say there is a deficiency in the, what you call that, waybill.
Documentation.
Documentation, right?
Yeah.
Now, somehow that A has paid the penalty, and ultimately the goods have reached B. B has recorded the invoice in his books of accounts.
Right.
Now, this is in continuation of what you were explaining previously. Now, is B eligible to take the input credit on that purchase?
B is eligible to take the input tax credit for the invoice that you have raised. Whereas B, let's say, for example, in your case, A has paid the penalty, right?
Yes, sir. Because A has supplied the goods.
Yes.
While the goods are in transit, it has been intercepted. Penalty has been met by A.
Yes. A is supposed to, so in my question, so I'll answer your question first. In such case, A is eligible to take the input tax credit of GST that you have sent on the invoice, that he is eligible to take. I mean, B is eligible to take. B is eligible to take. Okay.
Right.
What I have said is, prior to 31st December 2021, in the similar case, A used to pay 100% as tax again, and penalty at the rate of 100%. So apart from the invoice that apart from the amount that he collects from B for paying his liability of 100%, 100% of tax and 100% of penalty has been paid to whom? To the government at the time of intercept. Now the point here is that is being assessed under section 129. If it is assessed under section 129, whatever 100% tax is there, that you are not eligible to take that credit.
Okay.
Earlier, you are not eligible to take the credit in the sense, earlier what he used to do is, people used to pay the amounts and they used to claim it as a credit in their books of accounts or in the at the time of filing GST or 3B, because 100 rupees is their output liability. Another 100 rupees they used to take there, saying that 100% we have paid as tax, we will take it as a credit. So those practices are not allowed now. It is completely a penalty.
Okay. So that 100% tax paid at the time of interception,
Yes,
that won't be available in your 2B actually.
It will not be available, sir. Definitely not be available.
Okay. Right. So, but what originally GSTR 1 is filed by the supplier, to that extent of that credit, the receiver of the goods can avail that credit.
Perfect, sir. They can
take. Fine, sir. Now I understood that point in a very clear sense. So we have another question from CS Swati. Food delivery services like Swiggy and Zomato are considered as restaurant services, or their rate of TCS increased from 1% to 5% as per the new amendment. So who is liable to pay tax? Either
here the Swiggy and Zomato are liable to pay tax at the rate of 5% as restaurant services.
So the restaurant person who has actually given the delivery of the food item need not pay the tax.
They need not pay the tax, because what they will do is they will collect and say that these are my Swiggy sales. This is the amount of tax that is to be paid, and they report that in the exempted turnover category.
Right.
There is a clarification that was given in this aspect, sir.
So the restaurant person will record that in the exempted supplies.
Correct.
Swiggy will make it as a taxable supply and pay. Now then there is no question of TCS.
There is no question of TCS, sir. Yes.
Yeah. Hope Swati Garu, your query might have been answered. If you have any sub query, you may put forth before Fani sir. So it is cleared. Right.
So I'm just scrolling.
Right. We have got a couple of queries, sir.
Sure, please.
In one of my clients' case, e-invoicing was applicable from 1/4/2021, but he missed out that amendment. Now, what is the consequence to him apart from penalty? That is with respect to ITC eligibility.
With respect to ITC eligibility.
ITC eligibility, I think this is outward supply. Okay, maybe for that outward supply, when he has purchased those goods, let us say he is a trader, he purchased the goods, he has availed the credit. Now he has made the outward supply. Instead of e-invoicing, he went in for normal invoicing. So from that output tax, can he take the input tax, or the receiver of the goods now he is supplying, whether he will be eligible to take the input rate? Maybe the second part is the intention of the queries, I think, sir.
Maybe what I understand from the query is this: since the supplier has not followed or is ignorant of the amendment of e-invoicing being made, so his question will be, will my customer be eligible to take the credit of it?
Yes, sir.
Tomorrow,
yes.
What if my customer comes back to me saying that this is not a valid invoice, you are not supposed to take it? So first thing before they go to your customer, they'll come to you, the departmental authorities. And as I said to you, without an e-invoicing, it is considered as not a valid invoice. Okay, so which year is it? I mean, there's no, first thing, sir, there is no way out for this. However, one thing that we can actually be sure is, you write a letter, drop it to the authorities saying that these are the number of invoices that I have actually where e-invoicing is applicable, but I am unable to make the e-invoicing. These are the invoices that I am supposed to make as e-invoicing. Drop it to the government so that tomorrow, if something has been found in the audit, there are interest and penal implications that comes into picture. We can still fight saying that this is nothing but a procedural lapse, saying that these invoices are genuinely done because we have the e-way bill as well for supplying of goods and all, and we can still justify that aspect from a litigation point of view. But however, it is always better you drop it to the government on immediate basis so that no penalties and interest implications comes into picture. Now, second part of this question is, tomorrow when the other person comes, I mean, your customer comes to you and says that, I'm not eligible to take this credit, where you can still say that they are eligible to take this credit because the entire transaction is valid except for the procedural lapse. So we can fight on the basis of procedural lapse and say that they are eligible for the credit, and these guys are eligible to not eligible to pay any kind of a penalty or interest on those aspect.
Right, sir. The next question is, what is the penalty for unregistered person if he does not have bill of supply, if he does not raise, for that matter, bill of supply while supplying goods?
Unregistered person bill of supply. How is it possible? No, I didn't get you, sir. Bill of supply is only done in case of exempted supplies.
Yes, sir.
In case of an unregistered person, when you're supplying to an unregistered person, you will definitely raise your tax invoice, no? You will only not specify.
What is the penalty for unregistered person if he does not have bill of supply while supplying goods? So the person is not registered under GST. He is supplying some goods. He has to raise a bill of supply. He has not raised. So what will be the penalty?
So it's a general penalty, sir. It will be a general penalty because there is an unregistered person. You're saying bill of supply. You're saying all are exempted goods. If I have to put it like this, a person who is supplying exempted goods is ideally have to get himself registered, but he has not got himself registered, so he has become unregistered. Unregistered, not raising any bill of supply. Then what is the penalty? Ideally, he'll have to register and issue a bill of supply. Since he has not issued, they'll fall under the category of general penalty. There is no tax implications because the underlying supply is exempted. It's only the general penalty.
Yeah. The next query is, a person has not raised the e-invoice, though it is applicable to him. Now, can he apply to the GST department for voluntarily to waive penalty? So, waiver of penalty. Can the person who has not complied with e-invoice provisions plead the department for waiver of penalty?
Sir, instead of pleading, drop an intimation because they will not waive off penalty just like that unless adjudicating proceedings have been initiated. Let's say tomorrow if someone comes for an audit or a regular adjudicating proceedings happen, only then they will have the power to waive the penalties and all. So at that point in time, our letter, whichever we are submitting today, will be our savior. Where we tomorrow they'll come and write a simple paragraph saying that we during the audit have found that this finding has come in the audit. So these and all will trigger section 74 instead of 73. So let's not give a chance to it. So what we can actually do is you drop a letter and come back, where the department, when it comes back to you, you can show that you have already dropped a letter or intimated the department saying that these are the deficiencies that they have made. Subsequently, that can be waived off. They cannot speak on the penalties. We will have a strong ground on defending our penalties, sir.
Right. Sir, the next one is relating to ITC. Suppose when a supplier is not filing his GSTR 1 after collecting the taxes from his customer, whether his customer is eligible to claim the ITC on the basis of invoice provided by the supplier, or what steps need to be taken when supplier has not filed GSTR 1?
Perfect. So there is an High Court judgment of Tamil Nadu where it has been said that a supplier should not, the customer who is taking the credit of GST, where he has made a amount, paid the amount to the suppliers, and the supplier did not pay to the government, where it has been clearly specified that you cannot penalize those people because they've already made the payment. So that judgment, I will maybe I can share the judgment at a later point. But there is a Tamil Nadu High Court judgment which clearly says that just because in the default being made from a supplier standpoint, I am not credit. ITC is a vested right which I am supposed to take the credit. But if just because a supplier has not filed, I'm not eligible to. You cannot deny my right of ITC. So this can still be taken. This is allowed in as per that judgment. But it's a very aggressive position, sir. So if I have to answer a second question, what are the steps that are to be taken when supplier is not filed? One, make an intimation to the jurisdictional authority of the supplier. Second, stop his bills which you are supposed to pay going forward, so that he will definitely ensure that he is filed in those aspects. Tomorrow, let's say for example, third point will be get an indemnity bond. If the supplier has not paid today, tomorrow if some liability arises, it is a supplier's responsibility to get that liability adjusted.
Sir,
so these
court judgment what you have quoted, this is 2B. So whatever credit you have in 2B only we have to take. If one is not filed, it will not be reflected in 2B. But can we plead the High Court judgment, sir?
We can surely, sir. Maybe I'll make an analysis and I'll send it across to the entire crowd.
Right, sir. Right.
Yeah.
So another question with regard to ITC is, if a registered person has availed ITC wrongly, what are the other consequences apart from this payment of interest at 18%?
ITC utilization wrongly in the sense?
Wrongly.
So his perspective is availed itself is wrong.
Yes.
Am I right? Availed itself is wrong.
Or maybe this 2B, without in 2B, this month it is not reflected in 2B.
No.
Next month he has it is reflected.
So no, if it is a next month reflection, no ITC. He's talking about the utilization of ITC, sir. Wrong utilization of ITC. In case of wrong utilization of ITC, what do you mean by wrong utilization? First thing, maybe what I'm understanding is, let's say for example, he's got ineligible credit. That ineligible credit he would have availed and he would have utilized.
Okay.
In such case, what could be the penalty? So currently it is 18%, sir.
No, the amount which has been wrongly availed, first it has to be paid back along with interest of 18%.
18%.
Now, apart from that, is there any other penalty which will be levied, sir?
Nothing, sir. Nothing as such, sir.
Right, sir. So I may ask you one more query, sir.
Please, sir.
With regard to this, let us say this month the amount I have the invoice in my hand, goods have been received by me, but the amount of input is not reflecting in my 2B, right? But I have no cash to pay. This is actually happening, sir.
Happening.
Sir, let us say it is the case of, let us say a BD. It is 28%, sir. Right, and he has to pay some 25 lakhs or 30 lakhs of money, sir. Right. But he will not be in a position to pay that because his profit will not even be some 5 or 6 lakhs for the whole year.
Correct.
Right, but definitely in the next month that has been reflected in 2B, but this fellow took that in the earlier month itself.
Correct.
Now, will this person be left out by just paying the interest for that excess ITs utilized, or will they ask him to pay back the money also, sir?
No, nothing like it. So let's say, for example, I understood your question, sir. 2B, it is reflecting in the next month. Ideally, it should be reflected in the current month. But he has taken that credit also in this month and he has filed. It is just a matter of time, and only the interest portion of for 1 month will be applicable. And let's say it is 18%, it is 1.5% is the interest.
No, so what my query is, sir, let us say we are advising on those lines, because some people will come and say that, sir, we can't be in a position to pay 10 lakhs, for which we are already made a purchase and goods have been received.
Correct.
But at any later point of time, whether this fellow will be in a danger of getting a notice that without in your 2B, you have availed the credit wrongly. So pay back that amount. Will the notice be in that fashion, though it is appearing in the next month? Can I plead that in the next month?
I can plead, sir. It's a valid question. It's just happening with a lot of practitioners, a lot of clients, because due to the delay in filing of supplies being made, in that case, we will fight, saying that first of all, you're not supposed to take. If I have to speak as per law, you're not supposed to take. You'll have to spend cash. From a practical standpoint, I'll tell. Let's say you have taken. You have taken under what confidence you have taken? Because it is reflecting in the next month's 2B. How did you understand that it is reflecting in the next month's 2B? You have referred to 2A, because 2A will give you a lively picture, real picture, whereas 2B gives you only that cutoff date related aspects will be given. In that case, since you have referred to 2A and you have said that this supplier has already filed, so you will take a position that you will take that credit. Okay, and if you are taking that in this month, because you have already seen that 2A, that means it will obviously reflect in 2B of next month. So it's a matter of timing difference. Okay, timing difference of how much? A month. If I have to really plead it before the court of law, I can still say that it is a matter of time of only 1 month. That 20th I have taken earlier. I mean, I have taken in the 20th of this month, which I'm supposed to take in the 20th of next month. So it's a matter of 1 month of time. That 1 month only the interest will be levied, sir. They will not ask us to reverse the entire credit. They can't make this credit as ineligible.
Right, sir. Right. So, friends, sir, I think we have exhausted out of the queries, I suppose, sir. Friends,
right.
Is anyone to ask? Yes, sir. Sir, if I paid under RCM during the month of April, can I avail the same RCM input in the month of April itself?
Yes, absolutely, sir. You can avail.
Right.
You can avail, sir.
Okay, sir. What to the chairperson, madam, to give her closing.
And just to add on, since the session has been completed in a span of 1 hour's time, just to add on, there are a couple of other amendments which are very much critical during this budget, sir, where from apart from GST, there are certain things where SEZ is yet to come, where SEZ new law has to come, and the foreign trade policy has been extended till 30th of September, which is about to, a new foreign trade policy is yet to come. So one has to be very much be conscious on this as and when it comes. We'll have to understand the implications of these specific laws and understand the GST implications on those specified aspects if SEZ is concerned. So we need to understand the impact of those new laws which are coming up. So maybe that can be taken in a next session or whatever session it is.
Right, sir. Right. So nice of you. Over to you, madam.
Thank you, Phanikaran Garu, for your excellent presentation with detailed PPTs. As we heard, you are the newcomer and also for Vijayawada branch, but your presentation is like you have so many years of experience in this field. And definitely our Vijayawada branch will reach you for our further programs also. Thank you so much. And
thank you so much, ma'am. Thank you, ma'am. Thank you so much. Yeah.
So friends, we'll meet again tomorrow at 6 p.m. What's new in income tax? It will be dealt by CA Chundur Sudhir. I request all of you to please join the session 5 minutes before its scheduled start, as we will be commencing the session sharp at 6 p.m. For now,
So,
we'll set off.
One final note, sir. I mean, thank you, everyone on the Vijayawada chapter, to all the committee members for giving me this opportunity to come forward and put my thoughts on latest amendments on GST. Thank you so much. It's my honor. It's my pleasure and honor to be part of it.
Yes, sir. May I also request you to kindly share the PPT so that we will be sharing with the participants.
Perfect, sir. We'll do that, sir. Yeah.
Thank you.
Thank you.
And all.
Thank you. Thank you, sir.
Good night.